0.2% would be good news, bad news, manufactured inflation, and the overall WPI at 3.15. Your first thoughts?
Well, Lata, this was in line with my expectations because my forecast was 3%. And as you rightly said, of course, base effect to some extent had played a role. But, compared to November, actually, base effect was mild in the month of December. It's primarily the prices of non-energy commodities, especially metals and minerals, excluding precious metals, that really spiked up globally. And that is getting reflected through cost push pressures in manufactured price inflation. So whatever fall we had seen in perishable prices and because of that in food articles or primary articles prices is more than compensated for by higher global commodity prices and their transmission to manufactured product
I can just give you a rundown, Rupa. The fuel product prices month on month have risen by 1.8%. Last year, same time, they had risen by only 0.9%. So month on month, it's a 1.8% rise. And year on year, fuel products is a 7% rise. So that, as Nigel correctly guessed, is one reason why you're seeing a rise in the overall inflation. Manufactured products month on month is a rise of 0.3. Year on year, as we have already mentioned, is a rise of 3.2. Let me tell you the month on month products that have risen. Manufactured products headed by sugar, actually. Sugar doesn't come into food, it comes in a manufactured because of the processing involved. That's jumped month on month by almost 2%, 1.9 to be precise. Year on year, sugar has jumped by 31.7%. So that singly is responsible for the spike. Among other things, edible oil also has jumped by about 0.2%. The other, no, edible oil is a fall, sorry. The other products that have jumped have been paper products a bit, leather products a goodish bit, a 1% rise month on month. Chemical products are marginally higher. Iron and semis, so steel clearly is, steel and basic metals are both higher month on month as well as year on year. Month on month they are up 1.7%, iron and steel, and basic metals and alloys are up 0.7% month on month. Year on year both are up between 2 and 3%. So it's metals, fuel products and sugar that stand out as the big contributors to bringing the inflation, overall inflation up to 3.15 and the manufactured product inflation to 3.2. The positive from a consumer point of view is that food inflation or primary articles inflation has fallen to 1.2. Food articles inflation year on year has fallen to 1.54. Within food, the big crash, as we saw in CPI, is in vegetables. Vegetables have crashed month on month by 9%. So have fruits crashing by about 6%. And pulses, which have been a problem, have risen by barely 4% month on month. Year on year, it's about a 20% rise. Actually, CPI numbers indicated that pulses, even year on year, have become flat, no increase at all. Rupa, any further thoughts? I mean, the CPI came in at 3.6, the WPI is at 3.2. Are all these numbers crying out for some rate action in February?
Well, I personally feel that there is a scope for a rate action now because, demand compression post demonetization, especially in rural areas and, food articles basket is quite severe. So we are going to see more and more benign inflation prints. And generally, this year they are going to come out with union budget also in the month of February. And if government sticks to its fiscal prudence, then I think, the slowdown in real sector momentum combined with benign inflation prints plus government's confirmed commitment to fiscal prudence, all that will open up space for another rate cut for Reserve Bank of India. So there could be anywhere between 25 to 50 bips in February. That is my prediction. But one risk remains to that, and that is the global oil price trajectory, because we have to watch how the global oil prices move going forward. But barring that, I think domestic factors will, the way growth inflation dynamics is evolving, I think there will be room for a rate action in the month of February.
All right, we'll leave it at that, Rupa. Considering the hawkish language on December 7th, 1 to 2 step cut looks a little different, looks a little tough, but yes, things can change. Thank you very much for joining us. That's the word then. There seems to be space for accommodation. But what the Reserve Bank will do will also depend on global factors.